Hey everybody, it's Steve, and I thought I'd make a little video to kind of get you started on your homework for Accounting 110. Some of the stuff you haven't maybe seen for a while, and maybe for some folks the book by itself is you could use a little bit more help. And so we're going to go over, going to get you started on the homework, kind of do the first couple of bits of it, not really finish it out, we just kind of get people's head start and also kind of talk about what's going on in the chapter, the stuff that we're looking for, and what we're doing in the chapter. I've got Canvas open here. First of all, if you haven't downloaded the working papers and aren't using the working papers that we provide, here they are for chapter 7. You can see that most of the work has been done for you here. You just have to put your answers in. So if you're not using those already, you're going to want to do that. This is where you can find them on Canvas. And then I've already gone in here, I've gone into assignment 2, and I have opened up the problems. And so chapter 7, a lot of it, and especially for the first few problems here, is we're looking with subsidiary journals. Subsidiary journals are, the chapter, so this assumes you've read the chapter, and, so the subsidiary journals are just sort of special journals where you were putting in specifically, a lot of cash purchases, cash sales, cash purchases, and account sales, account purchases. The first problem here is PA2. Another kind of hint here, if you look, it's pretty small, but let me make this bigger a little bit. If you look here, this is Learning Objective 7.4. You can actually go back to the chapter and search 7.4, and you can go directly to where the chapter is talking about the stuff that is covered in the problem. So if you kind of are like, oh, I kind of remember reading some of this, but I'm not really sure, that'll take you right there. But then let's dive into this problem. So we've got the first one again. We're just dealing with the sales journal, and we have, what is this, 1, 2, 3, 4, 5, 6 transactions, but not all of them are sales. So we're only going to be working with most of these, but not all of them. And we'll talk about that as we go. So first thing first, this is a very straightforward problem. And so I'm going to pull up the working paper here. And we see we're working within the sales journal. And we have 4 entries here. So we know we're only going to be making 4 entries. And we have 4 credit sales here. So these are going to be a hint. And it really is, for this one, it's just putting in the information, because what the subsidiary journals will do, like here in the sales journal, you're not putting in a debit and a credit, because here it's got both. You just put in one amount because it's saying that for every one of these, it's an accounts receivable debit, and for every one of these, it's a sales credit, because these are all on account. And then so we just go in here, put the invoice number in, and keep it going. So here we go. We have a credit sale, and I'm just going to do the first one on these, because after I do the first one, it should be pretty straightforward. So the first one here is a credit sale to Green Lantern. Looks like we're using all comic book stuff. Credit sale invoice number 1 to Green Lantern Incorporated, account number 111, for $1,999. This one very straightforward here. So here we go over here to our invoice number, and we put it at 111. Customer's name, account, that's Green Lantern. And our post reference, here I put, I don't know that we have a really good, it doesn't really mention any, page numbers or any references, so this could be left blank. And then the number here, the amount, I should say, is 1999, right? We go back over here, we see, okay, we see the credit sale invoice, Green Lantern, that account number, and there's the invoice, and then there is, 1999. Pop over here, 1999, right there. And so we're going to do this for all of the credit sales here. Now keep in mind, we're just doing the sales journal here. We're not dealing with any of the money that we've received on account from them, so we're just worried about the sales. And that's how you get through the first one. That's, again, a pretty straightforward problem. I'm going to let you do the rest of it. And I'm going to pause this video a second and prep the second one. Okay, so now we're going to be working on PA3. This is just kind of expanding out the problem that we just worked on, but here we've got other subsidiary journals we're going to need to work in, right? And so kind of the point of the problem, I'll pop over there, is again, we're seeing the transactions, here we are right here. We're seeing the transactions that have been made, and we're going to decipher based on the information given what journals need to be, what these transactions need to, which journals these transactions need to be applied to, and sort of make sure that our record keeping is correct. And I'll go ahead and do the first one and kind of talk about the second one and let you guys go from there. So if we look at the working papers, we've got our sales journal, we've got our cash, so our sales journal, keep in mind that we're still working, if you think back to earlier accounting classes, and it's probably been covered in this chapter, but if not, is that we're dealing with accrual accounting. So that when we, even though we may not have received cash, you're still going to recognize those sales as revenue, right? And the same thing with our, just as an aside, the same things with our expenses. If we get an accounts payable, we count that. We don't wait until cash is expended or received. We count it not when the cash is received, but when the work is done, right? Okay, so we're going to now go back to the problem and take a look and see what we've got going on here. Let's scroll down a little bit. So we have this business, it's Donaldson Incorporated, and we're just looking at these 1, 2, 3, 4, 5 transactions that happened, over the course of July. So the first one is we sold 50 items, doesn't really even matter what they are, to Palm Springs Incorporated, offering those terms for $4,000 on July 1st, and issued invoice number 12 on account 312. So we look at the problem, we see what's happening, right? It says here the keyword sold, so we're going to be looking at the sales journal portion. Sold 50 items to Palm Springs Incorporated. We don't even have to really worry about the terms yet because they haven't paid, but we do need to worry about the 4,000 because that's how much it cost, and the invoice number and the account. So we look over here, is we know that it's a sales transaction because it's a sales. We know it's on account because there are terms here, and we know that it's with Palm Springs Incorporated. So we go back to our working papers and we see there's the sales journal. It's a sale. We know we're going to be working with this. Cash receipts. Nobody doesn't mention they've paid yet, so we're going to be working with this one quite yet. And we also have the subsidiary ledger for the companies that we're going to be working with in this problem. Number one being here, Palm Springs Incorporated. So we can, and here we have their account number as well, which is also mentioned in the problem. So we know we're going to be dealing here with the sales journal and most likely with the Palm Springs Incorporated subsidiary journal. That's who we're working with, and that's the case. And I've got a little bit of a hint here because I put the dates in, right? I left the first dates. So we go back to the problem. We see that we have our invoice is number 12, happens on July 1st, and it's for $4,000 to Palm Springs, right? So we go over here and we say invoice number. What was that, 12? So we're going to say 12. I'm going to say Palm Springs. Incorporated. Here we could, you could just leave it as Palm Springs Incorporated here, or you could go ahead and put in their account number as well. It's kind of up to you. Post-referencing, there's so many things in accounting, there's really not anything to go in that one. And how much was it for? Again, we have the debit and the credit under one entry here, so we don't have to do it twice. We always put in $4,000, right? So that part of the problem is done, but we still have to deal with the fact that we need to put in the subsidiary ledger for Palm Springs, I have a typo, but for Palm Springs, that they bought this thing for $4,000. So we are going to go down here. They have a beginning balance of 0, so we don't have to worry about any math. We just have to put in that they have purchased this. So the item, it's a sale. Reference is we're going to go back up and see what page. Here we because we're going to reference the page. We have our sales journal. We call that SJ 22. And it was a debit because, the accounts receivable debit, sales credit. So this is the accounts receivable subsidiary ledger. So we're only worried about the debit here of $4,000. Tab over there. And their balance, as you remember from just, they work like ledgers. We're also going to have the transactions, and we're also going to have the running balance. And so we're going to have $4,000 there. And that's the first entry. Like we've covered that it was a sale, and we've covered applying it to their account, right? So let's pop over here, and I think instead of the sales, I'm going to let you guys do the July 5th and July 8th. We're going to receive the payment, because this will cover all the portions of the problem, right? So we're going to receive payment from our friends at Palm Springs, and that's going to happen on July 9th. And so, okay, and we're all going to have, there's also, keep in mind too, that here in on the 5th, we also have a sale too. So this is not going to be our first cash receipt. But I kind of want to deal with this because because we received the payment from Palm Springs. We had the terms of 210 and 30. It's within 10 days, so we're going to apply a discount here. So it's coming. I'm choosing to use this payment instead of the payment in on the 5th with Miami Incorporated, but it will work the same way. So we go back over here to our cash receipts journal. The one on the 5th we already dealt with. I'm going to skip down here, and this is going to happen on July 9th. So say July 9th. And so the account credited. Who paid us, right? We know who paid us. It was Palm Springs. So Palm Springs. And here again, you can put in their account number or not. It's up to you. Let's see here. Do they have an invoice number tied to it? We don't have the invoice number up here because this is when we gain the receipt. You'd only put the invoice number here if it was a cash sale. That's kind of a hint for the one on the 5th. And so our posting reference here, we don't have one, but we have the cash debit because we are receiving cash for this, right? But we're also receiving the cash within the 10-day window, so we are going to apply their discount. And if we apply the discount, what was it, 2%? Yes, it was 210, so we're going to take 2% off. And so 2% of $4,000, 1% is $40, so 2% was $80. So we know we're going to have a sales discount, and we know we're going to have a cash debit, and then we're going to have the credit here for our accounts receivable. So for this one, for the payment for Palm Springs, we have the cash, and that's going to be, let's see, so $80 off, so it's going to be $39.20. Our sales discount, because again, they paid within the window, so they get a little bit of money off, is going to be $80. And we add our two debits together here, we get 4,000, right? Because that's what is our credit going to be. Our credit, is going to be for Palm Springs. And we're going to put the 4,000 in there because now they've paid off their account, even though they didn't pay the full amount. They got a discount because they paid within the time window. And so there you go. So you get the cash, the sales discount they received, and these would be the debits, in a traditional journal entry. And here we have a credit of $4,000. And now the other thing that we need to do then is go in for Palm Springs here in their accounts receivable subsidiary ledger and make sure that we recorded that as well, that they have paid us off. So we go here, okay, 9. This is a payment. The reference, what did I have? Oh, the same thing. It was a cash receipts journal. CR22. Okay. And then if we look over here, what was the credit here? We did the only thing we worked with accounts receivable was the credit here of the $4,000, because even though they received the discount, it doesn't really matter for it to balance their receivable account, because what happened is that the entire 4,000 that they owed went away, even though some of it was cash and some of it was that discount. And so now our balance, we put another 0 in here because they have paid off their account as of July 9th. And so you'll go through, and then for the other, so for the, let's pop over here. So for the, here we're going to have a cash sale, looks like. Sold these, for cash, so that's going to go in that cash receipts. Received our payment, but we also looks like we have a account sale for Smith Manufacturing, and then we're going to have to deal with too, and then the payment received from Smith Manufacturing. Looks like that's after the discount period, so you don't even have to worry about that for the other one. Okay, again, going to pause the video and then move on to the next problem. And I'll be right back. Okay, so now we're going to work on problem PA4. It's got kind of 3 parts to it. Let's take a look at it. PA4. So we've got these journals. We've got a sales journal, and this is a typo. It shouldn't say sales journal, it should say cash receipts journal. And so we go in here and we have, using these, journals and ledgers that follow, we're going to go in and we're going to look at the subsidiary ledgers using the T accounts, and we're going to prepare a schedule of accounts receivable. And so we have 3 parts, because we have use this, we're going to post them, we're going to prepare a subsidiary. So excuse me, we're going to use these journals and ledgers, we're going to total the journals, we're going to post the transactions to the subsidiary ledgers, and using T accounts to the general ledger accounts. So we're going to have T accounts, we're going to have our schedule of accounts receivable, and we're going to total the journals. So I'm going to pop over here and show you where we're going to be doing each of those things. Here's our schedule of accounts receivable. Here this is where we're going to be putting in the transactions for each of the companies that are in the problem. Here are the T accounts that we're going to be totaling up as we go. Just T accounts from kind of that the basic accounting principles. And then here we're going to be using we're going to be totaling up the cash receipts journal and the sales journal. Here, this part is actually pretty easy. This is just taking the information from, basically just recreating these, the sales journal, and again, this is supposed to be cash receipts journal, taking these and totaling them. So just go over here, put that information in, and then add in a total row at the end, put in the totals. That's all you have to do for that part of the problem. And then the rest of it is very similar to problem 3, whereas you're going through the transactions. I'm going to pop back over to the, we're going through the transactions for each company. Here we have 4. We've got Everett, King, Martina, and Shriver. Okay, it looks like we only have payments from Everett and Shriver. So I'll go through the Everett ones right quickly. Now, this is, again, very similar to the one in 3, but here we pop over and we see here dealing with the Everett company. This is their account number, and we have this date. And we're going to fill this in. And so what we're going to do, put this down here, make sure we're doing it correctly, is just fill this in. So we go to the problem, what do we have? We sold them something for $1,000, right? So we just want to go in here and put in their accounts receivable subsidiary ledger that they owe it, right? So we're going to go back over here. We're going to say put on February 4th, and let's just check the problem just to make sure. Yep, February 4th, Everett Company, invoice number, and they bought $1,000 worth of stuff. So we just pop over and we put it in. So the item was a sale. They purchased something from us. We don't have. Let's see here. Okay, we do. We have sales journal, page 79. So we're going to do SJ 79 for the reference. And the debit for the transaction was $1,000, and that's for, and of course they're bringing forward, because they had a credit of 0 going in. If they had, if they had a debit balance coming in, we would add it here. They didn't have a balance coming in, so $1,000, $1,000. And now for the second part here, I'm just going to go and do, for the example, I'm going to do the part where Everett pays, and then the rest of it you guys can fill in yourselves. So pop back over the problem, and they pay. So they paid on, the 5th. Invoice number, cash, it looks like they, again, paid within the window here, but that's not really going to matter for their accounts receivable, because we really just want to make that entire amount be credited so that they won't owe us anything. So that part actually kind of doesn't matter for this entry. We go in here, and I have already forgot the day they did it. They paid us on, the 5th, very prompt. So we go in here, and so we say on February 5th, we have a payment. And that was a page number that I already forgot. So we've got, again, this should be cash receipts journal. This is a typo. cash receipts. You do cash receipts or cash receipts journal. Either one of those will work. 2 and the credit, $1,000, and just like that, they paid off very promptly how much they owe us, and their account balance at the time of these entries is now 0. And if we look back, I don't think we do anything else with the rest of it. Nothing else from Everett for the rest of the month here, so that's what theirs is going to be. And then so you go through for each of these companies, and you'll see, what purchase did they make? Did they pay it off? Did they pay a portion of it? That sort of thing as you go along. And that's kind of again, a real a brief overview of the homework. I hope that helps. If you have any questions, always just swing by the virtual mediated lab. Those hours are posted on Canvas, and there is a direct link to the lab, which is on Zoom. It's on Canvas as well. So I hope that's helpful. Again, I'll be trying to make a few of these for each chapter as we go. Get you a little head start on your homework. All right, have at it.